1000. Sold goods on credit 1050. How much was there in the bank after these transactions? So basically you need to calculate the bank balance. And fittings 31,300, cash at bank 3,170, motor vehicle. So you have to add all this. So 88,000 plus 19,300. Let us just check 88,000 plus 19,300 plus 27,420 plus 31,300 plus 3,170 plus 18,360 187,550 187,550 187,550. This is the answer. Calculate the value of the liabilities. Liability is something which we pay to the outsiders, which we have to pay to the outsiders. Okay, so this is one, this is the other. So only two things are left. So 25,250 plus 60,000. So 85,250. 85,250. So this is liability. This is liability. This is something we have to pay back. Loan from bank is something we have to pay back. This is what we are owing to the outsiders. We have to pay back this. Calculate the trader's capital using the accounting equation. So this minus this, simple. That's also assets is equal to assets. So we have to subtract this from this. So we get accounting equation. So how do you calculate assets is equal to liabilities assets? So capital is equal to assets minus liabilities. So this is the accounting equation, right? So what is the other way we write? Assets is equal to liabilities plus capital. Assets is equal to liabilities plus capital. So how do we calculate? So 187,550 minus 85,250. So 102,300. 102,102,300 300. This is the trader's capital. So this is the end of question 4. Okay, so practice question 4. So now let us see question 5. So what does it say? Copy the following table and complete it. Show the effect of each of the following transactions. The first one has been completed as an example. So bought a motor vehicle and paid by check. So what is happening? Effect on liabilities, you have to write effect on assets and effect on liabilities. Okay, so bought a motor vehicle and paid by check. What is happening? Motor vehicle is coming in, so motor vehicle is increasing, and the bank balance is decreasing because money is going out. So next one, paid a credit supplier from the business bank account. So what is happening here? So supplier is a liability. Liability is coming down, and bank account is also coming down. So there is decrease in bank balance, and there is decrease in creditor also, supplier. So happening. Bank balance is. What is happening to affect credit supplier? Credit supplier is decreasing. So asset is also decreasing, liability is also decreasing. So next, C, received a check from a credit customer. So what is happening here? Money is coming from a credit customer. So there was money that was receivable from a person, and the money is coming in. So what is happening? Bank balance is increasing. Obviously money is coming in, bank balance is increasing. So but credit customer, credit customer, what he is doing? He is giving us. Credit customer is paying us. So this will decrease. Credit customer will decrease because he has paid the money. So it will decrease. No more. The money is no more receivable from this guy to that extent. Received a check from credit customer. Sold goods at cost price and received a check. Okay, so what is happening here? What is happening here? Bank balance is increasing. Bank is increasing. Bank balance is increasing. Why? Because we are selling. Okay, received a check from sold goods at cost price and received a check. So effect on liabilities. There is no effect on liabilities because it is sold at cost price and received a check. So inventory is also an asset. So inventory is also coming down. Inventory is decreasing. Why? Because when we sell, the goods go out. The merchandise will go out of the business. Dear friends, welcome back to Shasha's virtual classroom. So today we'll discuss chapter 1, practical question 6. Okay. So Sam provided the following list of assets and liabilities on 31st October 24. So machinery 30,000, all these things are there. So calculate Sam's capital on 31st October 24. So to calculate the assets, to calculate the capital, we need to find out assets. What are the assets? This is an asset, this is an asset, this is an asset, this is also asset, this is a liability. So all these are assets, right? So all these are assets. All these are assets. So this is a liability. So we add, so 30,000 plus 8,500 plus 6,100 plus 4,950 plus 986 0. 59,410. 59,410. So here, so this is 510. So what is the capital? Obviously, 59,410 minus 5110. So capital is 54,300. Okay. So capital, we have found out the capital. Now we need to prepare Sam's statement of financial position after the following transactions took place on 1st November. See, all the transactions have taken on 1st November itself. So on a single day, all these transactions have taken place. So we can just calculate this very easily. We can calculate. So what do we do? So we write down all the items here. Assets. So we write down all the assets here. So what are the assets? Machinery, furniture and fittings. So machinery, all these things are there. So let us see what are the transactions that have taken place. So on 1st November, right? So this is on 31st October. 31st October. On 1st November, what is happening? On 1st November, what is happening? Pay 2,150 to a credit supplier. 2,150 has been paid. 2,150 has been paid to credit supplier, liabilities. How much was the amount due to credit supplier? 5110. 5110. So from this, 2150 is gone. Okay, so this has come down, this has come down. Okay, next. So we can calculate the net amount afterwards. Received a check for 450 from a credit customer. Received a check from credit customer. 450 plus 450. So credit customer will come down. So credit customer will come down by 450. Next. A loan of 9,500 was paid directly into the bank account. 9,500 loan. So loan has arisen. So there is an increase in loan 9,500 and bank balance has also increased by 9,500. Next. Paid 8,700 by check for an additional machine. So machine check also, machine also 8,700. Check also is coming in. We have paid the check, so money has gone out and machine is coming in. So machine is coming in. So where is machine here? How much? So 8,700. 8,700. So 8,700 worth of machine is coming in. But what is happening to bank balance? Bank balance is going down. So 8,700 money is going out. So what is the net amount? Net increase or decrease? Net increase or decrease? So 30,000 plus 8,700 is 38,700. 38,700. So furniture and fixture is same. There is no disturbance. 8500. So inventory is same. 6100. So trade receivables. What 4950 minus 450 is 4500. 4500. So what has happened here? Let us check. 9860. 9860 minus 2150 plus 450 plus 9500 minus 8700. 8960. 8960. So what are the total assets now? 38,700, 8,500, 6,100, 4,500, 66,760. This is the next. So here liabilities is, so this credit supplier is 5110 minus 5110 minus 2150, 2960, 2960. This is 9500, 9500. So total liabilities is, so total assets is this, double underline. Total liabilities is this. So that is 2960 plus 9500, 12,460. 12,460. So what is the capital? Capital will be this minus this. So capital will be Dear friends, welcome to Shasha's virtual classroom. So, we will discuss